This episode contains discussion of investing in high volatile stock markets and real estate markets. The information shared in this podcast is for informative and educational purposes only and should not be taken as professional advice. Remember that any investing decisions you make are your responsibility alone, and it's highly recommended to seek legal and professional advice where applicable.
Welcome to episode 8 of the Multinational Money Podcast.
Welcome to the Multinational Money Podcast. I'm Johnny, your host, and if you're interested in expat life, financial freedom, and making the most of global opportunities, then this is your podcast. Today I'm joined by Ladislas Maurice, aka the Wandering Investor. Ladislas began his professional career in Switzerland before moving to Africa, then quitting that job in Africa to travel the world, and then from that, starting his own business, flipping houses, investing in emerging markets, and becoming a consultant for people who are interested in doing the same. So I'm very excited for this discussion on investing in property and stocks in emerging market, as well as pursuing second citizenships and residencies. So let's get into it. Okay, Ladislas Maurice, aka the Wandering Investor. Welcome to the Multinational Money Podcast.
Hey, how you doing, Johnny?
Great, man. It's great to have you on. I'm very excited for our conversation today. We're in we share a lot of similar interests, and we've had almost a similar kind of professional background with you maybe a decade or so ahead of me. So very interesting to see how you got there. So maybe we'll start with that. Tell us a little bit about yourself, about your background, and who the Wandering Investor is.
Sure. So a bit of background, did my BBA in international business in Canada, then went on to Australia to do my master's in business and law. After I graduated, I got a graduate job at Nestle in Switzerland, and then within 3 months they sent me to Africa. So I spent most of my 20s in Africa, first in South Africa for 4 years, then Ghana for 3 years. And then my last role there was being in charge of the milk business, the dairy business for Nestle for a few West African countries. So I was sitting on the executive board of Nestle Ghana. So my 20s were a lot of fun. It wasn't the typical, it wasn't the typical path, like corporate path, if I can put it this way. But then, working 60 or 70 hours a week kind of, got to me. After a while. I was like, do I really want to do this my whole life? I'd be looking at people that were senior to me, whose jobs I should be aspiring to, like, very smart people, successful, etc. But they didn't seem to have much when it came to work-life balance. Let's put it this way. So I was like, cool. I turned 30, time to open a new chapter. So I left. And I was like, I'll probably just go try and, get a job in Dubai or something. But first, let me go traveling. So I went on a trip from Oman in the Middle East near Dubai to Paris by car.
Oh, wow.
So went through all of Iran, Armenia, Georgia, all of Turkey, went down into Greece, up to Ukraine, and then to France. And that was just an eye-opener. So I was like about 3-4 months on the road. And it was the first time that I had two things at the same time. One is money, right? Because when I had time before, I didn't have any money when I was a student, stuff like that. And time, because when I had money working for Nestle, guess what? I didn't have time. So I had time and money. And I was like, And I was traveling, so I was like full of ideas. I'd go to these like random cities. Go talk to lawyers, go check out real estate agencies, and, I'd see value. I'd be like, oh my God, this is quite interesting, blah, blah. So I explored. So I started, buying apartments and flipping. I was like, okay, let me do this one deal. Then I'll, start looking for a job. And then, I never got a job. So now it's been 7-8 years that I'm managing my own business, my own money rather. And about 4 or 5 years ago, I started a blog because my friends were asking me, like, Ladislas, back then Facebook was still kind of a thing amongst millennials. And my friends are like, Ladislas, you're in all these like weird countries and you don't seem to have a job. It seems to have been a few years now. Like, what are you doing? So I was like, let me just start blogging about it. So I started blogging about my experiences. And, people started getting in touch with me. So I was like, oh, maybe I should have a newsletter. So I just, added a newsletter. Then I was like, oh, maybe, I should add a consulting service because I'm talking to these random people for free. I shouldn't be doing this. And then it just kind of snowballed into what it is now, the Wandering Investor.
Yeah. And I even discovered that you've opened kind of a French-speaking outlet of it as well, L'Investisseur...
Globetrotter.
Forget. L'Investisseur Globetrotter, yes. My French, I used to live in France and my French is not, fresh in my mind. So I needed a minute to think about it there. But thanks for the reminder. Yeah, that's really cool. Yeah. So is the majority of the people you speak to, are they mainly Anglophone or are you growing in kind of the Francophone sphere as well?
My English website, yeah, mainly Anglophone, but really people from everywhere. And then the French business is, a lot smaller because it's a market that's a lot, tinier, obviously. But it's growing fast because it's a niche. Like no one's doing what I'm doing in French. Like even in English, barely anyone's doing what I'm doing.
Yeah. Nice. And a big question I have for you is with regards to leaving your job, you're obviously in a fairly responsible position at Nestle, if I understand it as well. There's probably a decent paycheck, some good benefits. How did you, let me think about how to phrase this. Was it purely the freedom aspect that helped you break free from the golden handcuffs? Or was there anything else was it really hard to break those golden handcuffs eventually?
Yeah, it was really hard. When you're saving 6 figures a year, it's hard, right? And living in you have a nice car and I was staying in a building with a rooftop swimming pool, saving tons of cash. It was hard for sure. But at some point you need to, ask yourself, what do you really want out of life? But again, it's easier to get rid of the golden handcuffs once you've accumulated cash, and you don't get used to the lifestyle. So I've never been someone who loves luxury, who's obsessed with luxury. Because there were people in West Africa making salaries like me, and they would be just randomly flying to Dubai to go, spend thousands of dollars on champagne and 5-star hotels. I was saving my money, buying real estate, stuff like that. So when I left, I knew I had enough income to live off, not like a rich person, but just enough to, live in Eastern Europe relatively well. I was like, okay, cool. So, I can make my capital work, live in a modest way and then take it from there. And it's, at the end of the day, once you start managing your own money, actually, I'll put it this way. There's an opportunity cost to not managing your own money. Because when you're working 60, 70 hours a week and you don't have the time to manage your money, you end up in suboptimal investments. So my biggest investing mistakes were when I was working full-time at Nestle. Those are typically the worst real estate investments I made, for example. Some were good, but others, looking back, I'm like, why did I ever make that investment? Why did I ever get into this? Well, guess what? Because I didn't have time. I just kind of got into that. So once you realize that, you have enough money that you can manage yourself and you're comfortable with, taking certain levels of risk, etc., you can actually live off of that.
That's a very interesting way to look at things. I'd never thought of it like that. Of course, there's obviously the, that if you're self-employed or work for yourself, your income is unlimited. You can make as much money as you want. But I never looked at it as kind of an opportunity cost.
And that's sense. Even without taking the self-employment income and, the wandering investor, all of that. The reality is, my portfolio when I was working with at Nestle, probably return of 5%, and if all I needed was to double or triple that, which is not that hard when you're doing this full time at all, and which I did more. Guess what? That's a job.
Yeah. Great. So a bit more on those investments that you made. What exactly was your escape plan for getting out in the sense? What kind of investments did you, so you said flipping, but was it purely just house flipping, or was it that you had stocks and savings at the same time?
I had savings, and I had apartments giving me rental income. I left without a plan. I didn't leave saying, "Oh, I'm going to manage my money full time." It's just I gradually got into that realization. My plan was just go travel and get a job in Dubai, do something else, and then figure it out from there. But yeah, I just gradually came into the realization that I could manage my own money. So initially it was just rental income. And then, I'd go into a market and I'd be like, oh, wow, this is like pretty undervalued. If I lowball this, maybe I can get it. I could just change the kitchen and the bathroom and then try to flip. And this is how it started.
Yeah. If you found yourself in that situation again, would you have gone with a plan?
I'm fine in the sense that I have dealt with ambiguity my whole life. I'm used to change. I'm used to emerging markets. I'm fine with risk and ambiguity. For the vast majority of people, quitting everything without a plan is a recipe for disaster. I see it all the time. Like, for example, all the Canadians, or not all, many of the Canadians who left in 2020, 2021, they all went to like places like Mexico, Nicaragua, whatever, without a plan. And, 2-3 years later, well, guess what? They're going back to Canada because they didn't have a plan. They just ended up in some emerging market with, a few $100,000 of savings. Initially it was fine. Life was good. They started eating to their savings, and then they got a little nervous, like, oh, I need to get cash flow. Then they just jump into random business opportunities that are invariably going to fail. And then they come back and they're broke. So you definitely need a plan. You don't just do this. I got lucky, and I'm just also a bit more used to these things. And as well, working in corporate in Africa for 7 years, you have a plan, but it never works out. Like to be successful in emerging markets, sure, have a plan, have a general idea of where you're gonna get to, but the plan's never gonna work out because it's they're like curveballs thrown at you at every corner, and there are markets where to navigate them you have to be comfortable with ambiguity. You have to be comfortable with constant change because that's the name of the game. And you have to be comfortable with making big decisions with a lack of data. And you have to sometimes just go with your gut. So through 7 years of that full time, you also learn to just go with it.
Yeah. I guess that's great context for a lot of what we're going to talk about in this interview then. So perfect. All right. So let's start with property. This is like your biggest area of discussion or focus on what you do with your business, what you've done to build your own wealth, and also a lot of the content that you create as well. So we'll start with Latin America. Let's talk about countries like Colombia, Mexico. I know you've said Nicaragua as well. What kind of properties can people find in these countries, and how do they compare to prices in, for example, the US or Canada?
Cool. All right. So generally speaking, in these countries, because there has been less access to mortgages, prices are cheaper in absolute terms. Because they haven't been, propped up by money printing. However, the locals are not sophisticated investors. So when they have money, they just buy real estate or land. They don't go speculate on stocks. It's just not really an asset class. They don't really go buy bonds. They don't trust their banks either, because a lot of these countries have a history of monetary issues. So what you find is that even though real estate is cheap on a absolute value, from an absolute point of view, relative to local incomes, they can be quite expensive. However, what you want to do at this stage is to look at what is cheap in an absolute way, right? And then try to figure out to rent to Americans. That's what it comes down to. If you want to make money in Latin America, buy local and figure out a way to rent out to Americans, North Americans, generally speaking, because what we're seeing in Western countries is a general immigration trend of wealthier Westerners who are just fed up with politics in either Western Europe or North America. A lot of Europeans go to Latin America, but generally they have less money. They're tired of politics. They're tired of overregulation. They're tired of taxes. And they feel the atmosphere has become a bit toxic. So there's a constant flood of people moving from Western countries to some specific places in Latin America. And then they tend to just kind of gather in the same places. So the key is to invest in those places where real estate is still affordable in absolute terms, but relative to the wealth of the people and the cash flow of the people coming in is also kind of relatively cheap. So you can get some decent yields out of it and potential for capital appreciation.
Yeah, so it's a very specific business model
it's very specific. And so Mexico, in many ways, the ship has sailed. Mexico's done really well in the past few years. So prices have become, in many parts, objectively a bit expensive. So that's kind of gone. Now Mexico is more of a, for real estate, a bit more of a lifestyle place, lifestyle destination. If you want diversification, if you want a place you like, put it on Airbnb on the side, but you're not going to get like real alpha out of it. Right now, one of the better places is Colombia. That's, up the risk curve. There's some interesting plays in Ecuador in spite of all the, so for example, Colombia will be the younger crowd, who are going to Colombia mostly for entertainment and lifestyle. Then you go to places like Ecuador and some little cities, they're targeting the North American retiree market. People that are living with $2,000-$3,000 a month. In America, they can barely live with that, but if they move down to Ecuador, they live very well. So guess what? An increasing amount of people are moving down to places like this for retirement. So that's another target market. So it's about finding these little niches of essentially gringos that are moving and then investing in those places. The local markets can be fine as well, but there's generally less alpha, I would say, in the local markets.
Okay. And alpha, for anyone listening who's maybe not familiar with the term, what exactly are you referring to here?
More potential, more, aggressive results.
Okay. Yeah, makes sense. Yeah. And in terms of the types of properties, I've seen a couple of videos that you've posted. They tend to be like housing units, maybe not to the size of villas, but like an average size family house. What kind of properties are you looking at generally when we're talking about these properties that might fit for an investor?
I do a bit of everything. So I've done flips. I've done buying like cheap multifamily units. Right now I'm doing like a massive penthouse in Medellin, like 5-bedroom, 5-bathroom, jacuzzi, the whole deal. I've done just normal apartments. Right now in Nicaragua, I'm doing land banking. I'm just buying like plots of land all over. So it depends really on the specific play in that market. So I identify a market that I find interesting from a macro point of view. I go to that market and spend a few weeks or a few months on the ground. And then I ask myself, how do I play it? Sometimes it might be real estate. Sometimes, like for example, I went to Uzbekistan 5 years ago. I wanted to buy real estate. I came back with a brokerage account of random local Uzbek stocks. And it did well. Tripled my money. Real estate since then has done 2x, right? So actually overall it was easier, less of a hassle, and I did better with local stocks. So it just depends. I'm very agnostic in terms of asset class. It's just I look at the macro picture and then I'm like, how do I play it?
Okay. Nice. So now let's move on to some European markets, because you're not just focused on Latin America, of course. You've also looked at a couple of countries in Europe. One of them being Hungary, Montenegro, another country that you've done content on, and you also done a lot of content and research about Turkey. So you had an apartment in Hungary as well. So tell us a little bit about, your apartment and time living in Hungary?
Yeah, I mean, Hungary's treated me well over the years. I invested there when I was, that's some of my successful investments when I was working at Nestle. I initially bought apartments there in 2015 or 2016. I don't remember. I had a few apartments there. I gradually sold most of them. I still have one. If I were to enter Europe right now for an investment, I'd probably be looking at Budapest because it still offers overall good value for money. It's cheaper than Slovakia nearby, which makes zero sense. The valuations in Budapest are the same as in Krakow in Poland, which is a secondary city. So, gross yields, you can get 5-6% if you go on the long-term market. Short term, you can make more. But overall, for decent price points, you can get beautiful historical real estate in a gorgeous city. Why is it cheap? Because the forint is just constantly depreciating. That's it. But in terms of overall value, you get great value for money in Hungary and low taxation combined with a very good network of double tax treaty agreements. So I feel that Hungary, if you're into investing in Europe and you want value, is objectively one of the better options out there.
Yeah, because they had a golden visa program up until about 2017. And then recently they've also opened the white card, like digital nomad program as well. So perhaps there are people out there who are interested in Hungary.
Yeah, and they're launching a golden visa in July 2024. So like a real European golden visa. So they had stopped for a number of years. Now it's back. So, it's an interesting market.
Yeah. What about Turkey? Because Turkey is obviously kind of famous for its citizenship by investment via the property route. What do you make of that program overall?
So that program, I feel, is the citizenship by investment program that offers the best value in the world. It's been like this for the past few years. Invest $400,000 in any real estate in Turkey, and you get citizenship within essentially a year for you, your wife, or your spouse, and all of your underage children. So, look, if you're from whatever country, Turkey doesn't really offer great travel to developed countries. But as a Westerner, Turkey offers tremendous geopolitical diversification to your portfolio. So, like if you're doing business in Africa, or if you want to do business in certain countries that have legal issues these days, etc., with a Turkish passport, you can get through. So long term, I'd say for people that are for Europeans that are worth at least a few million euros, or Americans that are worth a few $1 million, being able to get a Turkish passport that then goes down the generations. If your kids are Turkish and they have kids, as long as they register the kid at the local Turkish consulate when the grandkid's born, they'll keep the passport. So all you need to do is to buy 400K real estate on the open market. You can sell it after 3 years, after 5 years without capital gains taxes, locally in Turkey. And then you have this essentially Ottoman passport that goes down the generations. It's a bit of a no-brainer. But people need to be comfortable with the fact that Turkey is always going to be making headlines in a bad way. You can't, there's no month where Turkey doesn't make headlines for some sort of crazy stuff, whether it be natural or political or financial or whatever. So people just need to stomach the volatility that comes along with Turkish investments and the risk, right? Because it's not risk-free. Turkey is not risk-free. Things can happen. And also the geopolitical risk of being Turkish.
Yeah. I guess, again, it's a very specific play, because if you're an EU citizen or a US citizen, even a UK citizen, like in terms of travel access, like visa-free travel, it's not going to change the game massively for you, but it does seem like more, a possible plan B, passport diversification.
It's a long-term play. And it's an intergenerational play. You're probably not doing it for you, really. You're probably doing it for your children and grandchildren.
Yeah, I guess, makes sense. And in terms of the property in in Istanbul. What can you get for about $400,000 in terms of value?
$400,000. I mean, I would recommend the secondary market, not new developments. You can get yourself, 2 renovated 2-bedroom apartments in downtown Istanbul. Like $200,000 a pop will get you a nice 2-bedroom apartment that's renovated.
Yeah.
Yield.
Because you can get multiple property on this as well.
Yeah, no, it's great. Anywhere in the country, you can go buy in some other city. There, you could probably get away with 2 or 3 apartments. 3 apartments if you go into Izmir, for example, rather. You can do a mix of cities. Gross rental yields, you're looking at 6-7%, maybe 8%. But it's tricky because the contracts are in liras and they depreciate. So you're making more in dollars at the beginning of your lease, less towards the end of the year, and then you need to renegotiate. So it's a bit of a messy process. Would I recommend just buying purely real estate at this stage? 2-3 years ago, 100%. It was great. Since then, prices have really shot up. So just purely as an investment, would I go into Turkish real estate right now? No. But for people who want the citizenship by investment, absolutely.
Okay. All right. So this is to kind of bring it all together on the property and emerging markets section. You've obviously got an ebook on your website, which is free to download. You said there's a lot of risk and people need to be comfortable with it. Are there steps that people can take to mitigate certain risks or limit their impact when they're going into these emerging markets?
Get a good lawyer. Just get a good lawyer. Whenever you hear drama of people that bought real estate and then it turns out they didn't buy it or this or that, it's because they went, and they bought from their girlfriend's uncle who had this to sell. Blah. It's always just ridiculous stories like this. Just get a good lawyer, get an expensive lawyer. I always get the most expensive lawyers. If people want recommendations for cheap lawyers, don't come to me. I use expensive lawyers wherever I do real estate deals, because look, there's so many known unknowns and unknown unknowns. When you do real estate deals in a foreign country, you can just assume things, and then things just come back with a vengeance, straight into hit you in the face with vengeance. So you need local experts and you need competent experts. And yes, there's always a cheaper lawyer. You can always find a cheaper lawyer. But cheap lawyers are for locals who know what they're doing and just need a lawyer to just do paperwork. But when you actually need advice and you don't know what you don't know, get a good lawyer.
Yeah. I mean, my apartment that I have in Spain, where we're talking obviously about a much more developed country here and, a property market, which is, a bit more stable with regulation that's probably more advanced than a lot of countries. But even still, I consulted a lawyer and there's stories of people here as well that, have fallen victim to property scams. And definitely, what you say, it could all have been avoided probably if they just consulted a lawyer or done some initial research, even on their own account, and then going to a lawyer with those questions. So it's definitely a key recommendation, both from you and I would definitely suggest it to people as well. Okay, so we hear the terms like CBI or golden visa, or make an investment and get residency. Explain for people listening, what's the difference between citizenship and residency in a country?
Cool. So essentially you can look at it in the UK. When some guy from India rocks up in the UK on a student visa and then stays longer because he gets to work, that's residency. Eventually his goal is to get citizenship. And so he stays X amount of years, passes the citizenship test, he gets citizenship, and now he's rolling around with a UK passport. So that's pretty much the same concept. So you as a Westerner, you want a residency in Panama, for example, because you want to be able to live there and benefit from low taxes, etc. That's residency, the right to live somewhere. Then you can buy a passport. A passport, like in Turkey, is you become a full-fledged citizen. So it means you can run for office, you can join the army, you That goes with all the liabilities of a citizenship as well. Residency is just a place you can live. Then you have temporary residency, where, you're forced to stay typically X amount of time so that it stays active. Then you can get to permanent residency, which is pretty much the same rights as a citizen without politics, without army stuff. And then you have tax residency, which is when you stay long enough in a jurisdiction that jurisdiction says, Johnny, you are now a tax resident. You owe us taxes on your worldwide income.
Yeah. Case in point in Spain.
Yeah.
Yeah. So something that I often ask myself is, when is it worth getting a citizenship over a permanent residence, do you think? Over just getting a permanent residence, you have it there. I might stay living here in this place, or I might go somewhere else, but I still have my permanent residency and I can go back. Or is it worth me pursuing a citizenship?
You might not even need a residency. 95% of people don't need any of the two. It really depends on your outlook on life. If you're happy in your country where you're living and you're happy with your passport and you don't see dark clouds over the horizon that tell you that, oh, maybe you should need a plan B, you don't need it. You're fine. If you look at your government or the place you live and you're like, ooh, I'd want to be able to, get out at some point and, maybe quickly, or I want guaranteed access to that low tax country because at some point I'll want to leave this high tax jurisdiction. Let me plant a flag now. Let me get permanent residency now whilst it's not too hard, so that later, if I were to go there, I can do it easily. That's one thing. Citizenship is more about, at least as a Westerner, it's not about travel rights because we have good passports. It's more about, what if my government were not to renew my passport for whatever reason, because I said something on Twitter that I should not have said, or, whatever. So that's more for people who are into that line of thinking. For them, it makes more sense to go for a second citizenship so that, if something happens, they still have a second passport they can travel on, do business on, bank with, etc.
Yeah. And so the return on investment, if you're becoming, a resident, making an investment, or becoming a citizen of another country, is that freedom or the rights that citizenship or residency gives you, essentially, from your perspective?
Residency and citizenship can bring you immediate return on investment if you go and become a tax resident and it's a lower tax jurisdiction than where you are now. So you buy a St. Kitts passport, and instead of paying 50% taxes in Spain, boom, you move to St. Kitts, you pay 0%, it pays for itself if you earn enough, right? But in most cases, the residencies and passports, unless you move to the jurisdictions, are more about options, sleeping well at night, long-term place.
Yeah, makes sense. Okay. And so we've touched on a couple throughout the course of this episode. What do you think are the cheapest citizenships by investment, or cheapest residency by investment, but also the best residencies and citizenship by investment?
Well, cheapest in absolute terms, Turkey is the cheapest because you invest 400K and then you can sell in 3 years. And the processing fees are very low. So objectively, that's the cheapest. But in overall price point, you can get a Vanuatu passport. It'll cost you about $130,000, essentially in fees and donation. But that's gone. That would be cheapest. But actually, Turkey's cheaper. So, it depends how you look at things. In terms of residency as a European, as a North American, as a Westerner, one of the cheapest options is just Paraguay down in South America. Essentially, you just need to show up with your apostilled birth certificate, criminal background check, and just show up. And that's it. They give you residency because they want European immigration.
Okay. What is your take on citizenship programs like Malta? Obviously very expensive from the price point, but an EU citizenship I think many people,
Yeah.
would argue that it is one of the best benefits
For sure.
that you can have in
Look,
terms
I mean,
of
if you're
citizenship.
Saudi or, you're from China and you're worth, at least $50 million, yeah, whatever, put 2% into a Maltese passport, all good. You get it for you, for your children. Plan B, access to Europe. They can all study in Europe. Like, sure.
Yeah, I think the Malta program, like you say, because I've been researching it for a video I was doing, there's a lot of requirements, a lot of financial requirements and a lot of eligibility criteria. So probably for the average person who's looking for a plan B, is maybe not going to fulfill those criteria.
Yeah.
So would you consider a Caribbean or Turkish citizenship by investment more valuable than a residency through a golden visa or residency permit in the EU or in one of the GCC countries?
Good question. So if you're a Westerner, yes. If you're from an emerging market, no. If you're from an emerging market, you want full EU access. If you're from a developed market, you want the Turkish passport or the Caribbean passport, probably more the Turkish passport for that geopolitical diversification. So it really depends on who you're talking to. So I wouldn't say one is better than the other. It really depends on who.
Yeah. So that answer, you're basing it on someone from an emerging market wants to increase their options, gain more travel access, access European market, US, whatever, and someone from a Western country who already has those access benefits needs to diversify in a sense.
100%.
And gain access or a foot in. Okay, perfect. Now, last section of the podcast, let's talk about emerging stock markets. So you mentioned Uzbekistan in earlier on, and I've seen you've done quite a lot of videos where you've invested in stock markets that no one would ever think of investing in. But I'm very curious to learn more about it. Why would someone choose? I guess it's based on the return on investment, isn't it? But why would someone choose to invest in individual stocks in Uzbekistan rather than just going with an S&P 500 or Vanguard World Index fund?
Yeah, because I'm buying stocks. I'm very long Colombian stocks as well, because I'm buying stocks that are at low P ratios with a ton of cash on their balance sheets. They're showing double-digit growth every year and then are spitting out double-digit dividend yields. What's not to like about that? In a world of crazy valuations, if I can buy cheap and cheap that pays me, I'm pretty happy.
Yeah, makes sense. And how do you gain information or get access to this? Because I guess from your professional background, you've probably got a good financial understanding of how a P&L works and how to be able to evaluate a company. How do you get that information in these emerging markets?
So I make the trips myself. 1, 2, I follow the right people on Twitter. Twitter is great. Like if to all your audience that is not on Twitter, that's interested in money, markets, all of that, Twitter is good. If you follow the right people on Twitter, you will get a really the algorithm will be feeding you very interesting stuff. So well curated Twitter feed is very, very valuable. But if you go on Twitter and you follow whatever, stupid, whatever, Taylor Swift or whatever, then yeah, sure, you won't get anything from Twitter. But just curate your Twitter, you'll get a lot. 3rd, I pay for newsletters. At the end of the day, you have all these experts all over the world that nerd out on specific sectors. You can essentially have your own hedge fund by just paying, Jonathan sitting in Kentucky and nerding out like ridiculous on some tiny, Canadian sector, whatever. And that's all he does. He's obsessed with that. He doesn't sleep. He's not married. That's all he does. And for $150 a year, you get all that intel and all that research. So you get this guy, and then you get another guy. You get a bunch of guys. You have a budget per year, and then you have essentially high quality research coming your way all the time.
Yeah. That's very interesting. No disrespect to Taylor Swift, of course, but yeah, I think I'd personally, yeah, I think, yeah, I would love to find this kind of information on Twitter or wherever it is, because definitely, yeah, to get access to that information, it can definitely be a game changer when you're investing. Obviously, I guess we kind of talked about risks again, but I imagine there's a lot of volatility in these stock markets. You having the information, I'm sure, will help you. But are there any other risks besides the volatility that possibly come with investing in
Yeah, you
emerging
can
markets?
lose everything. I mean, I'm still holding a bunch of Russian ADRs that were stolen from me. Yeah, you can. Your investments in emerging markets can absolutely go to zero in some cases. I've had a few zeros, for sure. So it's not just volatility. It's, because volatility implies that, if you wait long enough, it's fine. No, sometimes
it's like real
sometimes you just get a fat zero. There's a reason these countries are emerging. It's because they're a mess. Typically, they're less developed. They're less sophisticated. Things go wrong. There's less talent. The governments are just erratic. People are erratic. There's a reason these countries are not rich. It's because of a whole bunch of factors that then, once in a while slap you in the face when you invest there.
Yeah. So how much of your total investments do emerging market stocks make up? And if there was an average investor who's looking to get involved, what percentage roughly would you recommend to allocate of their portfolio?
I can't say that. Like, that's just telling people how much to invest in emerging markets. It depends on how comfortable they are, right? Like, really, it really depends on how comfortable they are. Look, I believe that we're in a world where the power and the financial power is shifting from the North Atlantic gradually to the East, and I want to position accordingly. Whether it be in those markets or in places like Latin America, which are a good place to write out all the nonsense that's going out in Western countries and conflict and all that stuff. So I think people should have some allocation for sure. How much, it really depends on their own situation. Personally, how much do I have in emerging markets versus developed markets? I'm well over 50%. I mean, probably, well over 70-80% emerging markets. Maybe more. Yeah, like most of it. Actually, most of it, yeah. The vast majority, yeah.
Well, very bold, but based on everything you said in this interview, it almost doesn't surprise me.
Look, at any given point, something is blowing up in my portfolio. At any given point, something's going very wrong in my portfolio. But I sleep well at night knowing that I'm diversified and that even though something's blowing up, something's booming on the other side. So I'm fine. But for people who like to focus on the negative stuff, almost. Don't do this to yourself.
Yeah. Great. And how can someone who wants to invest in one of these markets, you said you opened a brokerage account in Uzbekistan. Are there like platforms like Interactive Brokers that give access to certain of these markets, or does someone really have to go to Uzbekistan or wherever it is?
Yeah, like Uzbekistan, most of Africa, all that they're pretty extreme. You need to open a brokerage account locally. But there are a lot of stocks that are listed in the US or in Europe that focus on emerging markets, or they're ADRs. So you can buy Colombian stocks in the UK, in the US, for example. So Interactive Brokers generally is definitely one of the, again, I'm not talking about their balance sheet. I don't know what's there, but in terms of functionality, and I'm pretty sure you have an affiliate link you can propose to people. Personally, it's one of the platforms I use. It's definitely the best when it comes to overall market access in the world. And if you don't have an affiliate link, Johnny, I suggest that you get one.
Yeah, definitely. Yeah, for something like Interactive Brokers, I definitely need one, because it's much more complicated platform than you're trading to onto your Robinhood, your DeGiro, for example. But in terms of completeness and what it offers, it's like,
and you have all these the Canadian
ahead.
market, Australian market that have a lot of emerging market stuff. No, definitely. Anyone who invests internationally, they all have IB.
Yeah. Great. So, Ladislas, this was a great conversation. Thank you so much for your insights and sharing them with us. What I always do with my podcast guests is I finish on a fun question. So, your fun question is about the languages you speak, because I saw there's at least 5 that you list on your website. So, how do you speak 5 languages? Where did you learn them all? Or did you grow up
French and
speaking them?
English. I grew up speaking them, native in both. German, I went to high school in Germany, so I speak German well. I speak Russian quite well as well, because I lived in Russia and Ukraine, Kyrgyzstan, like all those Eastern countries. And Spanish, my Spanish is all right. It's not great, but I've been going a lot to Latin America, and I do a lot of real estate deals. So having a casual conversation about stuff in the kitchen, I can't. But you throw me in a remodeling job, and I can have a full conversation with the person. So I have a very specific vocabulary.
Yeah, that's funny. What I found actually interesting was I watched some of your French content, but your French accent it's closer to that of someone from France rather than Quebecois accent, which surprised me.
I'm French.
Yeah. Okay, makes sense then. Definitely makes sense then. Cool. Was there Serb on your website as well? Or did I miss? Okay, so I got that one wrong. Fair enough. Anyways, a wide range of languages there. Very interested. And I think how has speaking so many languages helped you on your journey as a wandering investor, and in general, exploring the world?
It just makes life so much easier, right?
Points of different cultures.
It's just
Definitely, yeah.
You just go around seamlessly, from country to country, and in most cases, someone speaks one of those languages, and in a lot of the world, and you're fine. I mean, for example, I remember I had a cop in Mozambique who's just so there it's Portuguese speaking. He's just hustling me for money, for a bribe. He's just hustling, shouting at me in Portuguese. Just oh God, the guy wouldn't let go. And then I don't know, at some point he just said something in German. I was like, huh? And then I started speaking German to him. And then it turned out he had studied in Eastern Germany during the communist time. So then we became buddies, and then I was fine.
Oh, wow.
So sometimes you just have these random things. Or Nicaragua, I had at night, I was in a bit of a dodgy area. I was trying to get out of there, and some guy comes up to me and starts speaking Russian to me. Some soldier. Essentially, he was learning Russian in Nicaragua, about to get sent to Moscow to military school in Russia for military exchanges between Nicaragua and Russia. So sometimes you just have these very random things that happen when you speak all these languages, which is fun.
Yeah, both of those instances are incredibly random. Yeah. Amazing. Well, thank you so much for coming on, Ladislas. Take care. So I hope you found that video interesting, guys. I'll leave links so that you can check out Ladislas in the video description on YouTube and on the episode notes on the podcasting platforms. Remember, if you'd like to support the podcast and the work that Millennials with Money does, then you can do so by signing up as a member on YouTube or by becoming a Patreon. And in return, as a thank you, you'll get access to some exclusive benefits. With that said, till next time, I'll see you on the next one, and let's get this money.